What's up, legends? Hope you're having an amazing day. Welcome to the beginning of a new trading week. Today is Monday, also known as false move week beginning. I don't normally trade Mondays, but I do want to talk about the weekend price action and just give you a little bit of an overview of what I think is going on. Now, obviously on the weekend, we had a fairly significant sell-off. Retail sentiment at the time was all buy the dip kind of thing on social media. So it did show that enough pain wasn't felt. Having that happen, having enough pain not felt, that usually leads to moves like this. So I'm going to talk about that. I'm going to talk about where price is now. I'm going to talk about the significance of this area right here that I've marked and give you a heads up as to what may potentially happen in US session happening soon, or probably even tomorrow, moving on for the rest of the week. So if you're new here, welcome. If you are returning, welcome back. If you're from the TTC tribe, I hope you guys are having a good trading day. Be sure to smash that like button nice and early because it does help me get these videos around the internet, and also subscribe if you're not already subscribed. So let's talk about this. Now, on the weekend, we know that weekends are usually a trap where price just consolidates and nothing tends to happen. There are occasions where a big move will happen on the weekend, and it's usually pre-planned. So we know what happened this weekend. We know that there was, so much FUD that came out that it kind of scared people a little bit, and we had this really big sell-off. Now, once you have it, you have to check to see who got trapped in that in order to know where we might go next. So when you're talking about traps happen in consolidation, right? So in consolidation, you want to have a look at the wicks. Are you getting more wicks to the upside or more wicks to the downside? Who's trapped there? And also open interest can give you a bit of an idea as to whether or not enough people are committing. So open interest gave us a very good hint of what happened on the weekend here. We had this very strong sell-off here. That was this red move to the downside on the open interest. That was so large and big that signals to you that that's a liquidation event, right? Because it means that so many positions are being exited at one area. This is stop losses, liquidation levels, things like that. They're all exiting so fast that people on the other side, so people going long, can't keep up. So this is everyone's stop losses and liquidation levels getting hit when you see that sharp drop to the downside. But immediately from that, look how this open interest rose and went higher than where it was previously from the actual trading week. Now, what that tells you right there is that retail weren't really scared of this. They were happy to buy the dips. I saw that it was the amount of people on my TikToks when I was saying wait till Monday opens, the amount of people that were like, buy the dip, bro. Like, this open interest just shows me and exposes them so much, because retail had no problem getting right back into a trade here. And then look what happened, because we had such a peak in the open interest, market maker held price for a while, then gave you a double-sided stop hunt. So this fast move to the upside would have triggered people who had buy stops above price, but also stopped out people who decided to go short in the consolidation, not to mention people who were already long before the breakout but only had stop losses just underneath these candles here, because this wick to the downside, not only did that induce shorts, but it stopped out longs. Then they moved fast to the upside, which liquidated shorts, triggered longs. Then they came back and did the exact opposite by sending price all the way back down and liquidating those longs that they just triggered. So it was crazy on the weekend, and definitely way too dangerous to leverage trade. And look, if you're buying dips for long-term holds, long-term strategy investing, fine. It was at a good level to do that, as long as you have, you're managing your portfolio well and you're able to keep buying dips. If this is not the last dip, then that's fine. But that's not what we're talking about on this channel. We're talking about day trading, and that is why we stay out of that for weekends, because of exact moves like this. Then when you have your look, you can see this move here, which was so clearly a stop hunt, it actually achieved the goal, because again, look at the open interest. So you start to have these fast shifts to the downside. That's people getting liquidated at speed. Then the market maker goes back into this accumulation zone, because once again, the market maker holds price in a consolidation to bore people into positions. When price just goes sideways for a long period of time, retail starts guessing which way the breakout is going to be, and they just get in without confirmation because they don't want to miss the move. So they do that, and you know that because once again, if we stretch out the open interest here, See how it was rising as price was just consolidating. Now, when open interest is rising and price is consolidating, the market maker doesn't need a stop hunt move like they needed back here. They don't need it because they're already accumulating the contracts they want for their next trap move position, right? Then finally, let's have a look at this because, I'm telling you, major games happened on the weekend and I hope that you were clear of it. Then finally, once that game was over on the weekend, we started to get rising price here into the dead gap zone, but we had declining open interest. What that means is when you have that divergence, so you have declining open interest but rising price, that's actually bearish because that means the market maker's closing positions against you whilst you're happy to continue to buy. And as you can see, we had this move to the downside right here. So far, we're back in another trap because look, they're just doing it to us again. We've got rising open interest, we've got price rising. So this time we have confluence because we have rising price and rising open interest, but we haven't broken any key levels yet. Now let's talk about this area that I've marked, because if you happen to catch my video that I put out on the weekend about trading the high and the low of the day and the significance of the high and the low of the day, on the weekends, you grab your high and low of the day from the whole weekend, right? So the price action after US closed on Friday. So that was this week here. So the high of the day currently is up at 26,544 and the low of the day is from this week down here, which is at 25,344. So that whole thing is the range. Now on that video, go watch it in detail if you want that strategy, because it really is a very easy way to day trade, and also it just lets you know early in the day whether it's even going to be worth watching charts today or not. But in that video I mentioned that if Asia gap opens with price somewhere around the half mark of the high and the low of the day, then price is probably going to do nothing that day. And we can see here this very candle right here that I've marked in yellow. When you draw 50% from this high of the day to this low of the day, 50% comes in at 25,943, that yellow line that I've put there. And if we look at this opening candle, it's right on that yellow line. So today there hasn't been a very good day trade at all. It's proving that method to be true. We did have 2 drops here. We didn't have the third drop. Is it coming in US? It may. Until we break this initial high of the day up here at 26,140, there is a big chance that level 3 is still coming. Now level 3 may come and only revisit this area because we do have trapped traders here, and maybe the market maker also doesn't want to release these traders. So that's what I would be looking for. If we cannot break the initial high of the day, then expect to come back to revisit this area. You need to reassess then and see, are they keeping these people trapped, meaning price doesn't return to the wicks of either of these 2 wicks. If they do fully recover these wicks, then you would expect that they're coming down for this liquidation level at 25,387 at a minimum. So that would be what you're waiting for at this point in time, for as long as price is under the initial high of the day at 26,140. If price can break that, however, that's going to be a decent sign. It still has battle zones above price because we will then have another vector candle here that needs to be recovered. But if it can push up through it, retest and hold that area, so come back to retest the initial high of the day, then it will probably make its way to these liquidation levels and hopefully eventually break the high of the day. That's unlikely, but you've got to be prepared for anything. So that's what I would be watching. I hope that this video made sense. Again, I'll try to link it up here if you haven't watched it already, but be sure to go back and watch that video in detail because literally it gave you today off so far, and all you need to do is come back in US to check if US actually wants to do something today. Have an amazing day. If you are looking for somewhere to trade on, be sure to check out the links in the description of this video. There are many sign-up bonuses, and not only that, it's an amazing way to support this channel if you are learning something and you want to see that education continue. See you guys tomorrow.